We have some breaking news. We have Amazon earnings coming out. Jared Blickery has that for us. Jared?
Yeah, another mega cap earnings announcement, and they knocked it out of the park as well. So let's go through the numbers for the quarter. Now we're seeing net sales for Amazon. Those came in at $108.5 billion, much higher than the estimate by about $3 billion, and the estimate of $104.5 billion. AWS, that's their cloud computing division, net sales of $13.5 billion, slightly topping estimates of $13.09 billion. It's their online stores. Those net sales really killed it, $52.9 billion in revenue. The estimate was for lower, $50.6 billion. And then EPS, that just knocked it out of the park, $15.79 per share, 50% higher than the estimate of $9.69. And operating income, also a big beat, $8.87 billion. Estimate was for $6 billion, so they beat that by about a third. And then Amazon Web Services net sales were up 32%. Estimate was for 22.5%. Now, when we get into their guidance, it's a little bit soft right here. Second quarter net sales, 110 to 116 billion. That is higher than the range of 108.3 billion that the street was expecting, but it's operating income for the second quarter that may prove to be a stumbling point if investors start focusing on this. 4.5 to 8 billion. And the estimate was for about 7 billion, so not quite really in the midpoint of that range. Nevertheless, a really great report. And if we can just go to, we have the Wi-Fi interactive there. I want to pull up a one-year chart of Amazon. Now, this stock peaked out early on in the pandemic recovery last August, September, but we are probably going to surpass those levels, if not tonight, then on the open tomorrow. So we might be saying record for Amazon, finally.
All right, thanks, Jared. We want to continue this conversation. Jack, let me toss it over to you first, because I know you mentioned earlier that cyclical value rotation. But when you take a look at these numbers that we're getting from a lot of these growth stocks, Amazon, like Jared was just saying, Apple and Facebook yesterday, any reason to still be bullish on some of these names?
I think so. I mean, there is no reason to think that the longer term story behind technology and the tech adjacent names is going to go away anytime soon. I think that the earnings that we've gotten today are very clearly indicative of continued strength in these sectors. And I don't think anybody can make a good faith argument that 10 years from now, technology or e-commerce will be less important in our daily lives than it is at the moment. I think it's only going to continue accelerating further. So I do continue to be bullish on these stocks. But what I'm also looking for is some of those other opportunities that exist out there that may be lurking beneath the surface. And that, to me, is still some of those cyclical stories, because while the reopening has gone very well so far, we are not fully reopened just yet. There is more room to run on that front.